Hello and welcome to the channel, guys. Okay, so I will break it down my trades for the week. It is week 10. We're in week 10 right now. I'll be breaking down my setups, explaining a little bit about my strategy and how I catch these moves. We got 5 setups this week, 3 wins, 2 break evens. Alright, I'll be explaining all the trades. It was a good week, a 30,000 week, 30k week. Could have been better, but that is what we got. Okay, so looking at my first trade, this is US dollar, franc Swiss, chef. I just say chef, man. I don't have time to be memorizing funny names. Okay, so looking on the daily time frame, this is Friday, guys. Friday the 24th. Now, when I see this, by this I mean this candle, this daily candle trades above this swing high right here, the swing high on the 6th of January. When I see that, I know that I am not looking for sales, okay? I'm only looking for buys because structure was broken over there, okay? Now, that's all I look for on the daily time frame. And now on the 4 hour, I would like to discuss something. This rectangle here is my point of interest, right? It was my point of interest from Monday. I want to explain why. You can see here on the 4 hour we've got what seems to be like 2 order blocks. This one order block, okay? Some call them order blocks, some call them continuous candles because it's continuing a trend. As you can see, we've been bullish for last week, okay? So in this zone where we find my rectangle, have a look to the left, okay? If you have a look to the left, you see that price breaks structure, okay? It makes a new high when it trades over above this, okay? So we are bullish. More confirmation, we are bullish. Okay, this is called break of structure retest, where when price breaks structure and then it retest. Okay, so that is what we got. When weekly highs and weekly lows are taken out, you go back in price and you find a zone where weekly highs and lows were taken out. For now, for this example, there was a weekly high that was taken out. Okay, this is how I identify a strong zone. This is how I identify a strong zone. One of the ways, okay. If you also look on Friday, this is the low of the day. So at the low of the day, we get a 4 hour order block. Very important, okay. I'm very interested when I see that. So now let's move on to the 1 hour. This is my setup, guys. This is the pie in the sky Forex strategy. It gives me setup every week. Like I said, we got 5 setups this week. 2 break evens, but they traded in my direction. Okay, so in this rectangle from Friday, so Friday trades higher than Thursday. Point number 1. So when Friday trades higher than Thursday, on Monday we wait for price to return to Friday's swing low. It does that. I did not take the trade. Unfortunately, I was in a meeting. Fortunately, on Tuesday, price comes back to that zone and I entered right here. Okay, at 4 o'clock, I took my entry. And in this zone, we also find an order block. So when you're looking for your point of interest, okay, you wanna see if there's an order block, a fresh order block. A fresh order block is an order block order block, pardon me, it's an order block that price is yet to tamper with, which is what we got in this instance. Okay, in this rectangle, my points of interest, we also get Friday's opening price. Okay, so in this zone there's an order block. It's Friday's opening price. It's the swing low. From this low, new highs were created. Okay, so we wait for price to come back on Monday. It does. On Tuesday I took my entry, a nice 122, a nice 122. And for those of you who use the Fibonacci, I do too. This is for you. So if you didn't know, when you use the Fibonacci, these are my intervals, by the way. You want your points of interest to be below the 0.5 in a bullish scenario. Okay, this is a bullish scenario, so my point of interest is below the 0.5. Okay, the 0.7 is here. Why below the 0.5? Because when price is below the 0.5, that means price is at a premium. You can buy it for a discount, which is what we do. Okay, so when price comes back into my zone on Tuesday, I identify special divergence. Okay, so without the special divergence, I do not take my trades. So this happens on Tuesday. I take my trade. Pardon me. A nice 122, and we in profit. Okay, TP hit. I'd also like to explain why I took 122, not 123 or whatever. Whenever I set my targets, I don't want price to make new lows or new highs for this example. So I didn't want price to have to trade above this swing high for me to take profit. So I brought my take profit here just around that order block over here that formed at 2 o'clock. Okay, the fact that an order block formed at 2 o'clock meant it was a strong zone. Okay, so hence my take profit was only here. Nice 122. I'm a 122 trader. Okay, it makes my trading so much simple. So this was USD chef. Next we'll be looking at GBP USD. Okay, now on to GBP USD, Tuesday's trade. This is the daily time frame. On the daily, we're trading between this horizontal line and this one. Okay, and over here by this one, we see that my 200 EMA is there. Just a quick take on the 200 EMA. It's not easy for price to just trade through the 200 EMA when it's on the hourly time frame, 4 hour, and the daily. Okay, but now very important to know, we don't make the 200 EMA our point of interest. No, it is just ideal for the 200 EMA. It's just ideal for the 200 EMA to be in our point of interest. So we don't make it our point of interest. When it's in our point of interest, it's just a confluence tool. All right. So since the Fed, the Reserve Bank said interest rates will still be going up, the GU dropped, right? It dropped in this week, right? It dropped, it retraced in this week. This week I'm still looking for sales. And now onto the 4 hour. What do we see on the 4 hour? Okay, we see that week 10, the week that we are in. Okay, so we analyze week 9. Week 9, trades in between the low of week 8 and the high of week 8. But week 8 traded below, it traded lower than week 7. So week 9, we're looking for sells, okay? But that's week 9. But same goes for week 10, because week 10 is yet to trade above week 9, okay? But now, if you can see my point of interest, here's another 4-hour order block over here. It's the high of the week, okay? The high of the week comes on Tuesday, the 21st. It's important to know the highs of the weeks and the highs of the days, the lows of days as well. Okay. So price is at a premium when it gets into my zone, which means it's above the 0.5 fib level. Okay. It trades into an order block, and at that time my 200 EMA is in my point of interest, which is ideal. Okay. But now I want you to see during week 9, okay, the move down, the bearish move down from Tuesday. The momentum was impulsive, was corrective compared to the move back up. Okay, the move back up was more impulsive. Okay, so when price moves to your point of interest, you want it to move in a corrective manner with corrective momentum. But if it's impulsive, when it gets to your point of interest, you don't take the position as soon as it gets to your point of interest. You want it to be approaching the way out of your point of interest for you to take the trade. Okay, so to explain that, I'm gonna go into the hourly chart time frame. So from Monday, Tuesday, it was a whole lot of momentum, impulsive momentum. Okay, it was just 2 moves back up into my point of interest. And in my point of interest, you also find opening price of Wednesday and closing price of Tuesday. We find the high of Wednesday and the high of Tuesday, which was the high of week 9. Okay, so in your point of interest, you want to see that. You want to see order blocks, you want to see opening prices, closing prices. You know, it makes the zone stronger. Okay, so on Tuesday, price trades into my zone with momentum. Okay, so usually I'll take the sell as soon as it touches my point of interest, my zone, if it goes back into my zone in a corrective manner. But it didn't. It went into my zone with impulsive momentum. Okay, so whilst it's in my zone, I'm waiting for it to try find its way back out. Okay, so when we look on the 30 minutes, okay, so now looking at the 30 minutes, price comes back down at 5:30. Okay, that's where I took my sell, because after 6 I do not trade. Took my sell at 5:30 when it was close to the beginning of my zone. Okay, I took the sell. It formed a continuous bullish order block and it went into my direction. Okay, I woke up on Wednesday with my take profit hit. So that was GBP USD for you. So if you can recognize, I trade from daily highs, daily lows. Okay, that's where you find my point of interest. But when price gets to my point of interest, I identify special divergence. Okay, in this case it was identified, thus I took the sell. All right guys, now onto Wednesday's trade. It was on Euro USD. And we started, this is how I approach my day. I start from my analysis from the daily time frame. Okay, which is what I recommend, and then we work it down to the 30 minutes or the hour. depending on how much clarity I have. So on Wednesday, which is this bullish candle right here, we see Wednesday trades above Tuesday, okay, into this zone of chaos. How can I put it? Just a lot of congested price action over here. Okay. But also realized how we were in a bullish trend, okay, and we came back down. We came back down to the swing low that made all of those highs, okay. So keep that in mind. So basically on the daily time frame, you look at what price has been doing for the last few days. Did it make new highs or new lows? Okay, it's just a quick glance at that. On the 4-hour time frame, these yellow lines, they divide my week. By the way, they divide my weeks. We can see we are currently in week 10. We see that week 9 trades lower than week 8. Okay, so I'm looking for sales. Okay, so every Friday, Saturday or Sunday, I will mark out the weekly highs and the weekly lows, like you see over there and there and there. If I'm interested in that zone, I'll mark it out in gold in this color, this rectangle in this color. So from last week's high, we see there's a 4-hour order block over there. And in that very same zone in this rectangle we also get the weekly opening price, okay? And very important, okay? And now onto the hourly. So my strategy, it lets me see what I'm looking for. It's a game of I spy, basically, okay? And I've gotten good at it. I spy what I'm looking for, and then once price gets to where I'm interested in, I identify special divergence and I take the setup if it's there. If it's not and everything else aligns, I don't take the setup, okay? I look at the special divergence and I also analyze the dollar index, okay? These dotted lines, they separate the days. So above all of these highs in a downtrend, there is liquidity, okay? You can call it daily liquidity, you can call it trend line liquidity, but above the daily highs, there's liquidity because we were in a bearish trend, okay? Keep it short and simple, 1 to 2. It's a $10,000 trade. So price, you want your point of interest to be in a zone where price has to take liquidity before it gets to your zone, okay? So the last line of liquidity before price gets into my zone was on the 22nd of February, right over here, okay? It takes that liquidity and then it comes down 1 to 2 from last week's high, okay? So from now on, I'd like you to mark out weekly highs and weekly lows because they're very important in a trending market. All right, so there was Euro USD Wednesday. Well, all right, guys, this is Thursday setup USD Swiss chef or just chef. Okay, so I've already broken down the DHF pair on the daily time frame and the 4-hour time frame. So I'll just continue from here. So I took sales, guys. I took sales on Thursday in this point of interest, this rectangle. It's gold, okay. The reason I took the sales is because price came back into my point of interest, and my point of interest happened to be the high of December, okay. And as you can see from this zone, we went down. So price came back into the zone. It can't just run through it, okay? Even if it wants to, even if price is bullish, it can't just run through it with no major news and all of that. Okay, so what did I say about where you want your points of interest to be? You want it to be above liquidity grabs, okay? Points of liquidity grab. Here's liquidity right here on Friday the 6th, okay, which was the high of that week. It takes out that liquidity, but when it comes to the week where the high that made new lows was formed, it couldn't trade above that. All right, and now onto the hourly time frame. This was my break-even trade, guys. Full transparency, this was my break-even trade. So we see on Monday and Tuesday we get equal highs, okay. Even though they almost equal highs, they basically count as equal highs because there's a whole lot of liquidity there, okay. So you want price to take that liquidity first before you enter, right? So as soon as price traded above these two equal highs, I took my position, okay. Now it gave me a 1-to-1. I have a 1-to-1 rule that basically allows me to manage my trade like a professional, like the professional I am. So I target on 1-to-2, but when price gets to 1-to-1, I break even, okay. So this is what happened over here. Price came to 1-to-1. Once price got to 1-to-1, I break even. I do not debate it, you know. I just do it because it's my rule and I follow my rules, okay. So this was the break-even trade on Tuesday, and we can see that no, this was the break-even trade on Thursday. Sorry, we traded USD CHF on Tuesday as well. We also took it on Tuesday, so I got confused. We can see today on Friday that price actually did go in my direction, but I don't have any guilt. I don't feel bad that I missed out on a winning trade because, you know, I can't tell the future, right? Even though price action did give me special divergence, it doesn't mean that I don't have losing trades and all of that, okay. We didn't have a losing trade this week for the first time this year, actually, to be honest with you, okay. So I recommend you adapt that rule, okay, depending on your risk appetite. You want to break even at 1-to-1, okay, because price could have easily came back here into my zone and traded higher, but it came back. By the time it came back here during this candle, of course I was at break even, so I took my stop loss to break even to protect my capital, because like I said, I don't know the future. Price could have continued up the bullish trend, right? But it didn't. Okay, now on to the last trade I took today, actually Friday, the last trade. On the daily time frame, we can see that on Tuesday and on Wednesday we had a lot of bullish momentum. Keep in mind, Wednesday was the first of the month, okay? So price sometimes X up, well, not really X up, there's just a whole lot of momentum and volume to start off the month or to close off the month, okay? So I've seen this, I know that we're bullish, okay? Highs were traded through here with this leg which came on Wednesday. Wednesday traded higher than last week, okay? On the 4 hour, off the bat, I recognize this order block. I spy this order block, and again, where does this order block come from? Okay, so at the low, which is right here, where there's also order block, this order block is at my point of interest. Price trades higher than week 9. Okay, when a week is traded through, follow that direction. Okay, so in this instance, we trade higher than week 9 and week 8. Okay, but now what do we look for? What I look for is for price to come back to the lows or the highs that break structure. Okay, and the lows I look at and the highs I look at are only daily highs and daily lows. At the daily low, which is on Wednesday the 1st, there's also an order block in my point of interest, in my zone, right? And look how price moved away from here. A whole lot of impulsive momentum. Being impulsive momentum, it returns with corrective momentum. Okay, I love seeing that. I love price to return to my point of interest in a corrective way. Okay, because then all I need to do is identify special divergence and make sure the dollar index is relating to what we're doing, right? Okay, on to the hour time frame. On the hour time frame, we also see that my 200 EMA is at my point of interest. Look at how price respected my 200 EMA. I took the entry at 12, guys. At 2 o'clock, I mean. Took the entry at 2 o'clock. It didn't get to take profit, as you can see. It didn't give me a 1 to 2. It did trade up to 1 to 1 though, which is where I set my stop loss to break even. As soon as it touches 1 to 1, I do that. But now back to my point of interest. What do we have here? We have an order block, guys. Not just any order block, we have a fresh order block. An order block that price is yet to tamper with. Okay, we also have Wednesday's opening price and Tuesday's closing price. And when we take the Fibonacci from the low that made new highs to the high, we see that my point of interest is below it's basically 0.5, is not below it. Okay, the 0.5 fib level is in my point of interest. I also identified special divergence. Price traded up 1 to 1, but because it was Friday, I knew that Friday can be surprising sometimes. Okay, so Basically, taking your stop loss to 121 is a win. Okay, in this industry, if you don't lose and you traded, you win. Don't you ever forget that. Okay, so break even. Don't feel bad about break even. No, it's okay. It's part of the process. You can't win every trade. Okay, so that was my weekly setups. If you enjoyed, thank you. If you didn't, thank you. I hope you learned something. Please don't forget to like and subscribe if you feel like your time was well spent. Kindly also check me out on socials at pieinthesky.strategy. If you want to learn more about special diversions and how to utilize the dollar index to increase your probability of executing a winning trade, you can check out my course, link in the description below. In the course, I teach everything about my strategy. It's the only strategy I use, and I leave no stone unturned. Full transparency, and you'll definitely learn something. You can also check out my psychology course where I teach advanced trading rules that fix the psychological challenges that traders come across. And if you're in search for a trusted broker, check out the broker I use for my personal accounts. Link in the description below. They're regulated, no hassles, super low spreads, zero swaps, 0% commissions, instant withdrawals, and you can even withdraw on the weekends. Until next time, guys, always remember the pie in the sky is profit at first bite.